Hello everyone. This is the pre-market report video for today 6th Jan 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Last Friday, Nifty reversed half of its gain it had on Thursday, but if you see Bank Nifty, it fell more on Friday than it gained on Thursday. So I think it's really important to understand why this behavior, and the question to everyone's mind is what's next? For that, it's important to understand the present banking issue. I mean, we have been discussing this almost the whole last week. First and foremost, now again this year, Indian banks already having a liquidity issue of near 2 lakh crore rupees, which in April-May period expect to increase up to 3 lakh crore rupees. The problem is that if Indian banks have this level of liquidity concern, then even if RBI performs its first interest rate cut in February month, banks won't pass on the benefits to the customers. This is the primary issue. Now, in addition to that, we discussed this on the last Friday's pre-market video. Apparently, ICRA rating downgraded Indian banks' credit growth rate for the present financial year and more importantly for 2026 financial year. They cited new proposed RBI rules as the reason, which banks has to keep additional 5% runoff factor for the retail deposit, and this is expected to be implemented from April 1, 2025. So I believe this made the banks unattractive, and in addition, at that time last Friday, banks were due to release their business update during the weekend. Hence, those who didn't want to carry their positions likely closed them on Friday. Now coming to the business update, as far as I know, during weekend, 9 banks released their provisional numbers, including HDFC Bank, Bank of Baroda, and Indian Bank, etc. If required, please pause and have a look. I don't think SBI or ICICI Bank or Axis Bank released their business update, which we can expect anytime this week. I don't have the calendar, most probably either today or tomorrow. Anyway, back to those who released their business update and who did better. It's really confusing, so please pause and have a look. As far as my plain eye, Bank of Baroda, IDBI Bank, Bandhan Bank and RBL Bank looks good, but there are other factors also there, like what happened to their CASA deposit, etc. Either way, all those banks will be on focus today and market expects to react for their business update. Here, because HDFC Bank is the index heavyweight, let's analyze the HDFC Bank alone. Their credit grown only by 3% compared to a year ago. On the other hand, deposit grown near 16%. We know credit growth rate is the important one compared to deposit growth, since credit growth rate earns money through the interest collection. On that way of seeing, it looks like very bad for HDFC Bank, but HDFC Bank got the unique issue when they merged the two company HDFC Bank and HDFC Limited. Their loan to deposit ratio zoomed to over 110%, which is a huge regulatory issue, and at that time their CEO said they will take at least 2 to 3 years for bringing that to down to national average 86 to 87%. So it's a known issue and market already priced it for 2 to 3 years to drop. Now on the positive side, based on December quarter business update, deposit outgrown significantly by near 16%. So for the first time after merger, HDFC Bank's loan to deposit ratio dropped below 100%. So to my eyes, it looks like HDFC Bank is operating as per their guidance, which is good. But still on the negative side, if not enough loan to the new customer, no rapid growth. Hence, market might take this on any way, maybe as positive but also as negative. Just for info, business update was released on Saturday morning, so ADR reaction on last Friday was not factored with this business update. Hence, in line with the Indian market on last Friday in the night in US, HDFC Bank ADR also dropped over 2% and ICICI Bank ADR dropped near 2%. But if you see the IT stocks ADR, it was okay. It looks like it might open positive. Let's see. In fact, last Friday night, US market had a mega short covering, so all the major index closed positive. Dow Jones was up by 0.8%, S&P 500 increased 1.26%, and Nasdaq rallied near 2%. And VIX dropped by 10% and moved to 16 from around 18 on Thursday night. Regarding oil, due to the cold winter expectation in Europe and US, it further increased by 1%. At the time of this video, WTI crude trading around $74 per barrel and Brent crude trading near $77 per barrel. So, global momentum is okay. Now, back to India related stuff. In addition to the banks, other finance companies like Bajaj Finance and AU Small Finance Bank, etc. also released their business update. So, we can expect fundamentals to drive all the financial stocks today. Just for info, Bajaj Finance asset under management increased 28%, deposit grown by 19% and new loan book grown by 22%. It's just my view. On the top line, it looks very healthy. Moving on, during weekend, one of the global big American investment firm Morgan Stanley released the list of 10 Indian stocks such as Reliance, Maruti Suzuki, HAL, SBI, Infosys, L&T, Trent, Ultratech Cement and ICICI Bank that they are overweight rating on them and described this list of stocks as a focus list. Generally, market consider this kind of statement as positive for those stocks, but I personally think over this Morgan Stanley statement, financial stock business update expects to drive the market. As a summary, US market closed positive and global momentum is good, though it was not reflected on the ADR. GIFT Nifty wise, Saturday morning it increased marginally and closed at 24,098, which is indicating flat to positive. In addition to the financials, some FMCG companies also released their business update. Marico and Adani Wilmar expect to post double-digit growth. On the other hand, Dabur expecting a low single-digit growth on yearly basis as their earnings results. About the things to look out, early morning before our market hours, Japanese service payment data is due. Then at 10:30 a.m. India's service payment data, followed by around 2:30 p.m. whole Europe, Germany and UK service payment data is scheduled to release. Here, UK service payment data at 3 p.m. can influence the Indian IT stocks. Then in aftermarket hours, first at 6:30 p.m. Germany's December month consumer inflation is scheduled to release, and in the night for US, their service payment data, 3-year note auction and factory orders are some of the items we need to keep an eye out today. About the institution, after one day of buying, FII again turned as net sellers. Last Friday, the net sold for 4,230 crore rupees and DI net bought for 820 crore rupees. Coming to technical, last Friday Nifty opened flat, but then it was under pressure throughout the session. In the end, it closed just above 24,000 mark. Thus, on the daily chart, Nifty formed a bearish belt hold pattern, which is a bearish reversal pattern, but the confirmation on the today's session is needed. Last Thursday, Nifty moved above Bollinger Band middle line, then on Friday, again dropped below. So, for the sentiment to improve significantly, Nifty must begin to trade above the midline. Anyway, today, if Nifty opens above 24,000 level, then resistance zone will be 24,200 to 24,250, which coincides with 50 and 100 exponential moving average, followed by 24,400. On the downside, falling below 24,000 would place the immediate support at 23,900 with a key support zone at 23,750 to 23,700. Overall, this week, we can expect Nifty to trade within the range of 23,700 to 24,500. Then for Bank Nifty, it opened 40 points gap down and wiped out all the Thursday's gains and closed below 51,000 mark. Thus, on the daily chart, Bank Nifty formed a long bearish candlestick pattern and continued to trade below 10, 20, 50 and 100 exponential moving average, all indicating a weak trend. So, 50,500 to 50,600 range expects to act as the crucial support zone, while on the upside, 15,800 to 52,200 range could be a crucial resistance zone. Regarding the options front, the maximum call option open interest was at 25,000 strike, followed by 24,500 and 24,200, with maximum new call option writing at 24,500 strike and then 24,400 and 24,200. On the put side, the maximum open interest was at 23,700 strike, followed by 24,000 and 23,500, with maximum new put option writing at 23,700 strike, then 24,000 and 23,500. Thus, from options data, Nifty might face resistance at 24,200 to 24,500 zone with key support at 23,700 zone. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.